fintechs, but even banks are acknowledging that there is a demand, especially in retail loans.
There has been a uptick on the consumer financing, what we have seen, whether it could be auto loans or the other unsecured personal loans. There's been a general uptrend across the industry, not necessarily for SBI. Obviously, as you mentioned, we can't discuss about the numbers now at this silent period. Our home loan growth always has been, which is nothing to do with the GST, but has been robust. So we have seen an improvement in terms of the credit offtake. And some of the numbers which the banks have announced has indicated that the credit has been good in the Q2.
Right, but as far as the impact of GST and all these announcements are concerned, only 7 to 8 days if you talk about in Q2. So in Q3 and Q4, is it safe to assume the number will be much better and bigger?
So generally Q3, Q4 are good quarters for us. Even if the GST were not there, we would have had a good quarters. This is a busy season, what we call festivals, marriages, and also you have economic activity picking up in the second half, monsoons over. So I think this will be further aided definitely by the GST rationalization, which has happened now. And we look forward to a good credit growth in the Q3, Q4 too.
Right. Last time when we interacted with you at GFF, this venue itself, we spoke about 1 lakh crore net profit. I know we have interacted about it during the year also, but with the kind of demand which is coming now, do you think it is going to happen sooner than expected?
No, I think let's not talk about the timelines. The objective is that this is capability of a large bank like SBI, which has invested in technology, digitalization, and seamless customer acquisition, and the customer trust which is built over the years. We believe that that 1 lakh crore milestone is only a simple milestone.
One of the biggest the reform which has happened is in the GST space for the last so many years. I think one is the simplification of the rate cut, and the process has also been made very, very convenient now. The rate cut which has happened, that is going to bring transformation in the entire economy of the country now, because it is impacting to each and every citizen of the country now. If you see the day-to-day uses what the people do it, now there the GST cut has been made zero now. So the impact is that disposable income of every individual is going to increase now. And once the disposable income is in our hand, definitely that is going to impact the economy. Definitely they are going to go for the purchasing of the various consumable items. Second impact which I am seeing it in the retail piece. Retail, again, there are two important segments, housing loan and the vehicle loan. And for the last around 15 days of this implementation, lot of tractions which we are seeing it in the vehicle loan now. Yeah, because one of the rate cut and cost of vehicle, because of the tires and all also rate cuts have happened. So that price has also been passed on to
so the demand is there, you are saying?
Demand is there. And since we have the liquidity, rate of interest is also very, very reasonable now. So all those things are driving the retail piece. Housing loan, again, there is a rate cut in the cement, 10% cut is there, a very substantial number. So that is going to boost the housing loan demand in the market. And bank like ours, we are prepared to cater the needs of those people now. Both these products, we have brought it in the end-to-end digital also. We have the digital vehicle loan. You can go to the showroom, go to our site, apply for the loan, and within half an hour, you will get the sanction, documentation and disbursement, and the dealers can be made the payment online now. Even the housing loan also, end-to-end digital piece which we have brought in now. So we are making convenient to the life of the people who are going for the credit for these loans now. Second impact which I am seeing it on the agri front also, and all the impact which I am talking about is not for 1 month or 2 months, it is going to happen in the economy for a very longer period now. So all those things put together, I am expecting that 1 to 2% further growth in the credit piece should happen because of this GST rate cut in this Q3 and Q4.
So you're saying 1 to 2% more credit growth can be there than the earlier anticipation or the guidance which bank would have given?
Absolutely, absolutely.
Okay, and talking about these sectors which you have highlighted where you are seeing demand, which will be kind of a T20 kind of a sector of growth where the huge growth is possible? Which are the sectors you see sustainable, the test cricket kind of a growth will be there?
See, retail, there will be, immediate impact is happening now because people were waiting for this rate cut to happen. And once the rate cut has happened, immediately the people have gone for the vehicle purchases and the housing loan bookings. There are another two important factors. One is the festival time. And every year, we also see that Q3 is the busiest season for the bankers. So GST rate cut, festival season, and the Q3 being the busiest, I think we are going to see a lot of tractions happening in the retail piece. MSME and agri on a long-term basis, there will be a good growth, and that is sustainable growth will happen in the system.
Agentic commerce is already happening in many parts of the world. You could argue Swiggy's agent for delivery, and then Expedia's and Make My Trips are agents for travel, and so on and so forth. That's happening all around the world, but it's going to go on steroid because of Gen AI models. And how do we go and protect the entire ecosystem while giving them the opportunity to go and use these tools to improve their livelihoods? We see this as a net new positive opportunity. What Visa is doing there, how does it help Visa first? In my mind, the way we help Visa most is by ensuring that customers have the best experience. So if customers have the best experience, that will drive usage of Visa cards, that will drive usage of our products and services across the board. So that is what we're laser focused on. In many cases, we'll go and put ourselves out there in terms of experimenting net new technologies with agents, with issuers, with merchants to see whether this works for them. And if it does, they'll enable consumers to shop in a better way than they have today. So that's our principle. How does it help customers? That's the most important thing then. And the way it helps customers is now as consumers, I can go to an agent and give them limited authority to go and shop online. And if you're going and shopping online using limited authority, then agent can only go and take action that they're authorized to do by consumers. So that's our principle. And we're doing that using existing technology, especially in India. This is absolutely phenomenal. We're doing tokenization and we're doing two-factor authentication. In India, very recently, NPCI had circular around allowing two-factor authentication using biometrics. So we're requiring all agents use existing token technology. It has to be tokenized. It has to be two-factor in an agent between consumer and agent interaction. So India is fully set up for this at scale than any other market in the world.
NBFCs are playing a big role. Fintechs are playing a big role. Now, fintechs want to come up with new models. Now, how do they test out those models? And FDLG gives them the power to do that. They go to an institution and say, okay, we have a model. We are so sure of that we believe that our losses are going to be very limited. And we are ready to share the first loss. So there are two ways to do it. One is you share a proportionate loss, and the second is you share the first loss, which is a slightly much more riskier and a much more safer option for the lender, but riskier option for the fintech or the entity which is facing the customer, because they are saying the first 5% loss, which is allowed as per RBI, will be taken by me. And a good lending book should not have a loss more than that. So you are virtually saying I'm safeguarding the lending institution, but it also helps the lending institution give you money at a lower rate. And that makes the credit available to the customer at a lower rate. So it's a very exciting proposition. It's good that some rules have been put around it, and I think it will be a very positive step for the industry.
The RBI has also put more guardrails to check defaults in retail loans. That has happened some time back last year. So how have you seen growth in retail so far?
Guardrails for the industry is very, very important, because people need to know what is the rate they are borrowing at, and they cannot be taken for a ride. When people are taken for a ride, it spoils the name of the whole industry and it spoils the whole credit growth. So those guardrails were very important, but with the guardrails also, it makes expansion possible. It makes life much more clearer for new fintechs, new opportunity. Okay, these are the rules I have to work within. Can I create some USP there. So I think overall in the long run, it is going to be very productive, very positive, and I am very bullish on it. And I can see that there's a lot of excitement in this sector, and this is growing, and money is going to be available to Indians, and that is going to fuel India's economic growth.
While day 1 and day 2 was action-packed at Global FinTech Fest, now all eyes will be there on day 3 when UK Prime Minister as well as Indian Prime Minister Narendra Modi are going to speak, and we will keep a close watch on that.